Welcome to Module 2, and this is the video to describe how to create a balance sheet. We are going to follow on with some of the learning goals from the Module 2 videos. Last video we were looking at an income statement, and now what we want to do is take a look at creating a balance sheet. So this is what a typical balance sheet looks like. You have your title, the name of the company, the type of financial statement, and the period of time, or actually the point of time for which the balance sheet is created. So an income statement has a period of time, but a balance sheet is as of a certain date. So this means with this balance sheet, Elvis Products International, all of these assets are as of the date of December 31st, 2011. So taking a look at a balance sheet, there are two major components of the balance sheet. On one side, or at the top, we have assets, and the other portion is the liabilities and owner's equity. And the reason why we divide it up into these two categories is because if we do our calculations correctly, our balance sheet should actually balance, and our total assets should equal the total liabilities and owner's equity. So as you can see, for both 2010, 2011, our balance sheet balances. Now, as we start to build the balance sheet, we're going to start with our assets, and we always start with the most liquid assets. Those are the assets that can be converted to cash most quickly. So cash and equivalents, accounts receivable, and then inventory would be the least liquid of these three. Now with liabilities and owner's equity, it's the same idea. You always want to start with those liabilities that you need to pay off most quickly. So your accounts payable, the short-term notes payable, and other current liabilities. So current means that that it must be paid off within the year, just like total current assets up here would refer to those assets that could be converted to cash easily within a year. Now, as we move in terms of liquidity, we go from current assets to those assets that can't be converted very quickly. So these are our fixed assets, and these would be our plant and equipment and any accumulated depreciation on our capital assets. Down under liabilities, we have our long-term liabilities such as debt. If we were to take a look at a bank loan, this would be the portion of the bank loan that would be paid outside of the year, and the short-term portion of that debt would be considered a current liability. Finally, the entire point of the balance sheet here is to show that there's a balance between the assets and the sum of the liabilities and the owner's equity. Now, when we're referring to owner's equity, there's two major components. There's the common stock, or if it is just a single owner, we often refer to this as owner's equity. And this is the amount that the owner or owners, if we're talking about shareholders, have invested in the company. So this is the amount of money that has been put in by the investors or owner. Now, the retained earnings is that portion of profits that has been reinvested back into the company. So these are profits from last year and previous years, and those are cumulative. And you need to subtract also, if you happen to have stocks, any dividends that you've paid out to your shareholders, or monies that you have paid out back to the owners. So that's what your retained earnings are. So let's go to a spreadsheet and create this balance sheet. Okay, what I've done is opened up the income statement that we created from the last video. And this video has, or this spreadsheet has, no custom number formatting, so this is just the numbers as they are naturally. And in the previous video I showed you how to convert these, so you could display all of these numbers divided by 1,000, but right now these numbers are just in their normal form. I have at the top the input area with the 40% tax rate, and you'll notice that I have used the max statement in order to ensure that the taxes are never calculated as a negative number. You can either use the max statement or the if statement to do that. The other thing too is that if you wanted to take a look, we've used the text function here to concatenate or to add this number 2011 to the end of the title up here. So if you're to take a look, we're saying for the year ended December 31st, and then we add the year at the end. So that's just a text function that you can use that will convert a number into text and then format it however you would like it. The and sign, or the ampersand sign, is just a way of gluing together all the text strings. So notice that the first text string has quotes around it, and then we are adding to the end of it the text string that is whatever is in cell C10, and we convert that to text. You can play around with that, and sometimes that's quite useful. Okay, now what we're going to do is we're going to go to sheet 1, and we are going to start the balance sheet. So I'm going to go to cell B2 because we don't have an input area up at the top, and I'm going to just reference the Elvis Products International title. I am going to take it and copy it down. I'm going to change it to balance sheet. And I'm going to change, instead of it saying for the year ended December 31st, 2011, what we want to do is we want to say as of December 31st, 2011. So I am going to put here as of December 31st, 2011. Now I'm going to create we'll do a few, I'll create this right across, just do two shaded gray and put a border on the top and bottom. I'm going to create my top title, which is assets, and then when I get down to the middle part here, that's when I'll add my liabilities and owner's equity. And I'm going to put here 2011, and I'm going to put here 2010. All right, now what we're going to do is we're going to start listing the current assets. So we're going to start with those things that are most liquid. So cash and equivalents, accounts receivable, inventory. All of these put together are what we call the total current assets. Now I'm going to keep similar formatting as to what we had before. So I'm going to go up here and italicize this, and I'm going to indent these three. And this will just help to show that I'm going to take the sum of these three amounts to create the total current assets. So just entering these numbers in, we've got for 2011, we have 5,000 or 52,000 as the total cash and equivalents. We've got 402,000 for accounts receivable and 836,000 for inventory. Now, what I want to do is just format these so that it has the commas there, and it'll make it much easier to read. And so what I'll do is go to number format, and I'm going to go to more number formats, custom, And I'm going to use this one here. I don't need to have cents, so I'm just going to have that one. So ampersand or pound, 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 comma, pound, pound, 0. So that will automatically put the comma in. There we go. And then I want to take the total current assets. I'm going to put a line underneath because I'm going to be summing all of these values together. And I will use the sum formula rather than adding C6 plus C7 plus C8. Another option is to just use the auto sum and see if it'll give me the right area. Now you'll see that it's trying to add in that 2011. If you wanted to, you can just grab the handlebar at the top, drag it down, and it will do the correct area. Now I'm going to do the same thing for 2010. So I'm going to enter in 57,600, 351,200, and 715,200. And I'm going to just copy the formula over here. So you'll notice that it is taking the sum of the three numbers up above. One of the things that didn't copy over very well, though, or didn't copy because I didn't drag everything over, was the actual format. So going back, showing you again how to use the format painter, what I can do is I can take, let's say 402,000 here with the comma, the way it's put between the 2 and the zeros there. I'm going to hit Format Painter. So I'm going to take whatever that format is there and I'm going to paint it, and you'll see that it copies that format over for all of these other numbers. I'm also going to underline on both sides there. So that's just using the format painter. I could have easily just gone up here and changed the number format for all of them, which is probably what I'll end up doing at the end. So now we've got total current assets. What I want to do is take a look at the more of the long-term assets, or the fixed assets. And if you wanted to follow along in your Maze textbook, I'm really looking at page 49 through page 53 as I go through and create this balance sheet. In fact, I think the final balance sheet is exhibit 2.5 or no, I think it's 2.3, sorry. Yeah, 2.3 on page 52. All right, so total current assets, we're going to follow that up with the fixed assets, which is plant and equipment, and accumulated depreciation. Now, the plant and equipment, these are all of your assets that you have accumulated or you've purchased. And so we're taking a look here at the EPI, and they have plant and equipment worth $527,000. And the previous year, they only had $491,000. Okay. Then the accumulated, let's go back to, we'll start with 2010 because depreciation is something that accumulates over time. So in 2010, we had $146,200 in depreciation. Now, in 2011, the amount of accumulated depreciation we have is whatever we had in 2010 plus any new depreciation we had from capital assets that we purchased in the current year in 2011. So in order for us to get the accumulated depreciation, we go to the income statement, and we can see that in 2011 we had a depreciation expense of $20,000. So we'll go here and we'll say equals D11 plus the income statement, and we'll click on the 20,000, the C16. Okay, so in 2010 we only had 491,000 of plant and equipment. We purchased, obviously, approximately $36,000 worth of plant and equipment, and we also see that we increased the amount of depreciation that we had this year because of that increased plant and equipment. So the next thing we need to do is to calculate the net fixed assets. And whenever you hear net, that's usually a good hint that you're going to be subtracting. So in this case, what we wanted to have, I'm going to move that over to the left and I'm going to italicize it. What we are trying to calculate is how much our plant and equipment is worth now. So if the value, the original value of purchase is 527,000 worth of plant and equipment, and 166,000 of it has depreciated so far, then the next net fixed asset is the difference between the two. So it's going to be 527, so C10 minus C11. Okay, so 360,800, and I'm going to do the same thing, just copy that formula over here, 344,800, and I want to show that I've done a calculation, so I'm going to put a line. So that's indicating that I've done a subtraction there. So now, the last thing I need to do is calculate my total assets. It's a calculation as well. I'm going to move it over to the far left side, italicize, and because it's a major category, I'm going to put it in bold, and it's just the sum of the current assets and the net fixed assets. And I'll copy that over. Okay. So we've calculated the assets for both years. Now what I'm going to do is calculate the liabilities and the owner's equity. And I'll do the same thing where I create a shaded heading with the borders on the top and bottom. I don't need to put the year. We'll keep that blank. But then we're going to talk about our liabilities that are current liabilities. So these are liabilities that we generally have to pay off in a year. So we'll start with these. And the most recent ones are usually accounts payable. And then if you have any short-term notes payable, it's like a very short-term loan, and other current liabilities. So any loans or any interest on loans that you need to pay, or any payments on those loans that need to be paid within a year, this is where you would put them under other current liabilities. And I'm going to indent these over to the right. Oops, no, not indent there, indent there. Now with accounts payable, these numbers are just given from the textbook in terms of what's owed in each of the 2 years. So I have 175,200. I have 225,000, 140,000. Going to go now to 2010. I have 145,600, 200,000, and 136,000. Now I'm going to just change the number format to the one that we've been using, and that's this one here. Okay. And now I'm going to total up all of my total current liabilities, just like we totaled the total current assets. And I'll put a line underneath both. And I'll use the sum function again, and I'll use AutoSum. There we go, and copy it over. Excellent. Now we're going to do the longer term liabilities. So these would be your loans. So under this, we'll call it long-term debt. And the long-term debt is $424,612. And for 2010, the long-term debt was $323,432. I will create a total for the total liabilities now. And the total liabilities, put that over there, italicize. The total liabilities is just going to be the total current plus the long term. So I'll put another line underneath because I'm going to be adding up those two. In this case, I'll just say it's C8 plus C19, and I will copy it over to 2010. Now what we're going to do is we're going to do the last little bit, which is our owner's equity section. So now we want to do the two components. It could be common stock or shares, or if it's just a single owner, we call it owner's equity. And I will put retained earnings as well. These are the two components of owner's equity. And I'm going to tab that in. And I'll just do my title right now, total shareholders' equity, which will be the sum of those two. And I will italicize again. And then the last thing I'll do is create a final total for the total liabilities, and owner's equity. Okay, so moving that to the left side, and we're going to bold and italicize it. I'm going to make the column a little wider so it'll all fit in. And now we'll enter the numbers in. For the common stock, for the common stock we have 460,000. And the retained earnings is 225,988. Now the common stock the year before was also 460,000, so that indicates that they haven't sold any shares this year, or the owners haven't invested any additional cash. The retained earnings is 203,768. So this would indicate that they have reinvested some of the profit from the income this year back into the company. And the retained earnings is always equal to last year's retained earnings plus reinvested profit minus any dividends that have been paid out. And so we'll say here the total shareholders' equity is just going to be that 460, C21 plus C22. Copy that over. Now, because we're adding, I'll put a line there indicating we've done an addition. And then the total owner's equity also will have a line underneath because we'll be adding it up. But 1 second here. So we say equals the total owner's equity and liabilities is the total liabilities plus the total shareholders' equity. And I'm going to put a line to show that we've done another addition there. And I'll just put a thick line at the bottom to show that we have, or we can do even a double line at the bottom. There we go, to demonstrate the bottom of the sheet. So taking a look at this, I'll expand it just a wee bit so you can see it all. And make that a little wider. The last thing I need to do is spread this title across the 3 cells. So I'm just going to right click and I'm going to say Format Cells, Alignment, and I'm going to say I want to center across the selection. Okay. And I'm going to format the painter, and I'm going to paint the 2 rows. Oops, paint the 2 rows below. So here, format painter, and there. Perfect. So we have Elvis Products International. We've done the balance sheet, and what I've tried to walk through here is the fact that we just really have assets. We have current assets and our fixed assets, and a total at the bottom for the total assets. And then we also have, and because we are totaling there, we're taking these 2 cells. So I'm going to actually put a line at the bottom. There we go. So our total assets is calculated. And then we also calculate our liabilities first, our short-term liabilities, and then our long-term. And we total that up. And then we also calculate our common stock or our owner's equity and our retained earnings, and we total that up to call it total shareholders' equity. And when we add up our total liabilities and total shareholders' equity, that's when we get our total liabilities and owner's equity. And if I highlight that in bold and that in bold, you'll see that we do indeed have a balance sheet that balances. So I'm just going to rename this sheet Balance Sheet. And there you go. Thank you.